Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, October 2nd, 2019. Hope your week has been going well, and let's get started. So in the morning notes that I sent out today, I'm not sure if you guys had a chance to read them, but what I was talking about, I was showing you some of the premium members report that we had put out, and really the whole thing is timing is everything in the market. Knowing when to anticipate weakness and strength is probably one of the most important pieces of your arsenal that you can have. You can use your technical analysis, you can use whatever you want, but a lot of it is the time period that you really have to pay attention to, and that's really what our predictive analytics model is. For anybody that's kind of new to this, what we do is time. Woody has technical timing indicators. These they typically predict when markets are going to turn into weakness or strength, and a lot of times they're a few weeks, even a month out. So you're able to adjust your portfolio, and even if the time periods don't come exactly on date, because that we never say that's the this is your drop dead date or anything like that. A lot of them do happen on the exact dates, but what it means is that even if a term period is ignored, it typically is not ignored for that long, and when the market does cooperate with the actual move that was anticipated, it gets exaggerated in the direction, whether it be up or down. So time is our number one thing that we follow, but we also, what we do is we have sentiment that's able to back it up. So if we're running into a time period that's supposed to be looking for a reversal to the upside, and we have sentiment that has extreme bearish sentiment readings. What we do is we looked at the technicals to figure out where the price is going to reverse to the upside, and it's the same thing on the downside. So that's the model that we use, and nobody else has this model, because nobody has the timing indicators that Woody uses, as well as the sentiment readings and the technicals everybody has. And when everybody's looking at the same thing, typically the opposite is going to take place. So let's recap as far as how we got here, and this will kind of show you the time period part. So this is going to August 12th, and there's a daily timing low near the last week of August. So what we were looking at was, that the markets were heading down. It was going to stay down to the last week of August, and then there's another interim low due, and that's what we're running into right now. So even though we were looking for the low in August and a bounce into the September, we were then looking for weakness in October, and this is the date that we're looking for the low. So you can see on the 12th, that's what you knew once we started coming into the later stages of August, you don't want to be pressing the short side. So on September 3rd, we did get the bounce. We were heading up, and what he was looking at here was this strength could continue into, and this is this is the date period on it. And there's a large indicant due on September 18th. It's the Fed meeting, and it's negative. So basically, on the 3rd, we were looking for strength to run into the 18th, this September 18th. And then there's also a negative profile that's due towards the end of September, which sets up for October weakness. So this is going back to September 3rd. We pretty much had a roadmap for what to look for, and what it was strength into the 18th, maybe some choppiness, and then towards the end of September is setting up for weakness in October. So this is kind of your footnotes as far as what to do and how to look to anticipate what the market's going to be doing. And then on the 24th, we're looking at the low date. So going from the 24th, we've already identified when to expect a low date, and trading range. This was the trading range highs on September 25th to the 27th, and defined negativity on the 2nd. So we know today was the 2nd. We have been dropping pretty hard, and this is the chart that kind of shows what I just recapped. So last week of August, this is the 28th. We did start a big rally. This was the 18th. That was the top. We stopped down. Then we chopped around again. We were still going up and down. Ran into the 28th, and now we're looking lower, and this is the second, and you can see what's taking place. So again, like it's what you were looking for is this bounce into the 18th. It wasn't to get aggressively short, but you want to start taking off long positions, start building a short position, and we knew October was going to be very weak, and that's really what we're looking at until we run into the next low date. When we run into the next low date, what I'm anticipating is we're going to get a series of these bearish sentiment readings, and from there, it's probably going to set up the next big rally, and we already kind of have the high for when the rally's going in. So as I said, Woody's technical timing indicators, sometimes they go into just a few weeks, sometimes they go out a month, and we already know when to be looking for that particular the top date as well as the low date. So this is really how the whole system works. Now let's just go over some of our charts here. This is a monthly chart, and this is one of the reasons. What are you saying that this market is not going to go into another breakout time mode until after 2020? He has 2022. Now, this is a monthly chart, and you can see we have bearish divergences here. So this is kind of supporting that, and this is after from 2009, a massive run. The pattern here is this reverse symmetrical triangle, and the 50-day moving average, 2532. If we break through these levels here, I anticipate that we can get a move that could come all the way down to this support level here, which is 1800. That also matches up with the 200 monthly moving average on the monthly charts. So don't be surprised to see us here at some point within the next couple of years. And again, that's long term. It's not any kind of trading, but for people that are looking to manage, say IRAs or something like that, don't be looking to get long until the 2022 time period. But this may be the area that we're buying. So let's move on and now go to a weekly chart. Hang on one second. And here's the weekly chart. Here's that reverse symmetrical triangle. Again, bearish divergences. So we have the monthly with bearish divergences, and we have the weekly with bearish divergences. So every time we're getting these bounces, and we're getting everybody that's saying, we're going to finish at 3,500, 4,000. These are screaming the exact opposite. And all we do is look for what our what these technical timing dates are, and that's when you look to short. But when we get into a technical bullish time period, you can go long. So here you can see 28.56. This is going to be support right here. This is your the 50-week moving average here, and if they hold it, I'm anticipating a bounce. If they lose that, then we're most likely coming down to this support at the 28.31 level. So now let's take a look at the daily chart. Here you can see we are at the 200-day moving average. If you look at the morning notes, I said I thought that the 28.75 was going to be a magnet. I said, we should expect some bounces, right? But obviously, when the market rolls over, it goes all in or all out, and we made it down to the 28.74, which has been my target for quite some time, and we got a little bit of a bounce. So you can see our indicators are just starting to roll over there. If we go to a 60-minute chart, we don't have any bullish divergences yet, very overbought. So I'm anticipating if they bounce it, that we could get a bounce someplace up into the, the 29.20, 29.40 area. But we know this isn't the low date is not in place yet. So you're going to be looking to short rallies until we run into the low date. And the good part about knowing the low date is that everybody's going to be panic selling, and you're able to buy at the cheap. When everybody's panic selling, you're buying, and then you get these massive rallies to the upside. But obviously, we go in both directions. So if we see some more weakness, I'm anticipating that 28.31 will be the next magnet. On the upside, our major resistance 29.40, 29.50. But again, I don't believe that it's going to break through this level just because we're nowhere near where the low date is due. So we're in sell the rallies mode. So really that's basically all we have right now. One quick thing, we got bombarded with new subscribers with that 3 month special. There's 4 left on it. If it's not, if you don't get in, and like if you go and put in this coupon code and it doesn't work, you can use the 12-month special. You can do that one, or just sign up for a $150 a month. But you really want to know when these dates are coming, because when volatility hits, people are always doing the exact wrong thing at the exact wrong time. So you want to know when the dates are. You want to follow what sentiment is, and then from there you really just follow what support, resistance, and where the technicals are, and make the trades and let the market do what it's going to do. So with that, have a great night, and I'll talk to you guys next week.